Hey guys.
Hey.
Do you have a day job and also have a side hustle? Well, if that's you, you're going to want to stay tuned because we're going to run a masterclass today on all things tax.
Yeah, so today's video you're absolutely going to love. We're going to be covering for you different scenarios, super practical. Say for example, you have a job but you also want to operate as a sole trader. How exactly do you work out your taxes? How much should you put aside for paying tax on that side hustle? Or what if you did it as a limited company, for example? What about national insurance? It gets all complicated. Well, today's video is the one. We're going to be breaking it down for you guys.
If you love the sound of this video, hit the like button.
Straight away.
Show us you're enjoying this video and share this with somebody who you think will find this valuable.
Yep. Right, we're going to jump straight away to my computer now where I'm going to be sharing my screen and walking you guys through this masterclass today on all things side hustle taxes. Okay, definitely make sure you stay tuned and watch it all the way to the end because every single part of this video is absolutely useful. All right. Okay guys, so here we go. Welcome to this presentation today, courtesy of Financial Joy Academy. So here is the agenda for today. Okay, so the first thing we're going to be covering today is looking at the sole trader versus a limited company. How do you actually decide which one you should start with for your side hustle or your online business whilst also having maybe a full-time job, for example? Okay, I'm going to be giving you some tips on that. Next, we're going to look at the sole trader example as well as a calculation. I'm going to use a real life example and kind of show you how you'd be able to work out what taxes you should be paying and how much you should be putting aside based on the example. You can try and replicate this for your own personal situation. Next, we're going to look at the sole trader and national insurance example and calculation. So you're not just thinking about taxes for a sole trader situation for your business, your online business or side hustle. You also have to pay national insurance here in the UK. Next, we're going to look at the limited company scenario. I'll give you an example and then give you some illustrations on how to look at the tax situation if you have a limited company whilst also working full-time as a PAYE employee. Okay, and then finally we're going to touch a little bit on salaries versus dividends, okay, from a limited company perspective. Now, before we jump in, a quick one just to say that this is brought to you by Financial Joy Academy. This presentation actually comes from our academy. So if you want to start or grow your side hustle or your online business and build wealth, then Financial Joy Academy is definitely the place for you. Just wanted to show you this to say this is kind of what we do over there. We have more than 40 courses and masterclasses. We offer group coaching. We have a truly supportive community of other people with a similar mindset starting side hustles and online businesses. We actually keep you accountable. So you're actually taking action. Finally, you get to network within our community and grow wealth. And you have experts showing up to do masterclasses. Okay, so if you want to check that out, feel free. I'm going to put a link to you below and above for you to check out. Okay, right, let's dive in and start. So sole trader versus limited company. Which one should you start with first? Now, from a general perspective, I'm going to make the assumption here that you have a job and you are also going to be working as a self-employed person. That's completely fine. You can be both employed and self-employed at the same time. And from a self-employed perspective, you can either be operate from a legal structure perspective as a sole trader or as a limited company. Now, generally speaking, I would say that if you are someone who's earning around £50,000 and above, so you're in that higher rate tax band, then it will make sense for you in the longer term in the medium to longer term to actually start off as a limited company. And that 50K I refer to is 50K of other income outside of your side hustle income. So this is income from your day job and perhaps other income you might get from things like interest or dividends and so on from maybe investing your money and so on. But 50K is the amount that kind of indicates to you that you should start as a limited company. If you're earning below 50K, then it will probably make sense to start as a sole trader. But as I say on the screen here, there are other factors to factor in. Everyone's personal circumstances differ, but if your case is really simple, then this guideline should be able to help you. Okay, here's an example starting with a sole trader. So in this example, we've got Kemi. Kemi is a 25-year-old trainee accountant on 35K per annum salary, okay? So she pays her tax and her national insurance contributions, NIC, via PAYE, which is the pay as you earn system here in the UK, okay? So her employer takes care of all that admin, and that's great, okay? However, Kemi is also entrepreneurial. She runs a side hustle. She's into her fashion. She loves doing her thing. And her entrepreneurial activities result in her generating a revenue of £25,000 in a year, okay? But connected to those revenues that she generates, she also has some expenses. Principally, there are different kinds of expenses you can have in a business. You can have expenses that are not allowable for tax purposes, and then you can have expenses that are allowable, i.e. it means that you can deduct those expenses from your income, the side hustle income, and you don't pay taxes on those expenses, okay? So in this example, she's got £5,000 of allowable business expenses. I'm going to be going into a bit more detail of other examples, going to show you what these allowable expenses are for sole trader purposes, because some people usually think that you're not allowed to deduct expenses if you're operating as a sole trader. I'm going to show you some examples. So the question we've got is, how much tax will she pay on her total income of £55,000 in a year? So 35K that she's made from her day job and 20K that she's got from her side hustle profits, i.e. £25,000 of revenue, less than £5,000 of allowable expenses gives us 20,000. So 35 plus 20 gives us 55K. And as a result of that, how much will she need to put aside ready to pay in tax for that side hustle, okay? So before we go into the calculations, very important to mention this exemption, okay? In case you're somebody who's making less than £1,000 in side hustle income. If your total trading or miscellaneous income is less than £1,000 in a tax year from the 6th of April to the 5th of April each year, you don't have to register as self-employed or pay tax. That's worth mentioning. So for people who might be making bits of money here and there from like consulting or maybe from eBay, provided it's less than £1,000, then you don't have to kind of worry about this sort of thing, okay? But what's worth mentioning, that exemption, okay? Now, next is for us to talk about tax thresholds, okay? So you have a personal allowance. Everybody who works has a personal allowance of £12,570 in a year. Okay, so for this tax year of when I'm making this video, 2022, 2023, it's that amount. And then it stays fixed until the end of 5th of April, 2026. Then income tax is paid on anything above that personal allowance. Okay, just kind of setting the scene for you guys before we go into the calculations. And then here are the thresholds for which you then pay income tax. So on that first 12,570, you don't pay any tax on it. And then anything between 12,571 and 5270, you pay 20%. Then you've got 40%, and then you've got 45% for additional tax. Okay, so that sets the scene for the next page. Okay, so in this page, for us to work out what Kemi's tax situation is going to be, how much she needs to pay, put aside for to pay the taxman. Let's first of all set out her actual tax situation in her day job, because this is going to play a role in working out what she needs to put aside for her side hustle. So you can see on there that Kemi's, from a tax year perspective, has got 35K in that very first line, line A. Then I've got their side hustle income. I've put 0, just kind of create a bit of a structure for us, okay? Total incomes A and B, again, is 35K. Next, we deduct the personal allowance for the year, which is 12,570, giving us the next line, A plus B plus C, which is £22,430. This is her total taxable income. Out of this then, if you use a salary calculator, just go on Google and type in salary calculator UK. Okay, this is where you get the next set of numbers from. You can see that her income tax to be paid at the basic rate, because that's where she's at. She's earning less than the threshold for the higher rate. So she's the basic rate taxpayer for this scenario, is £4,486. She has nothing to pay at the 40% rate, and her total income tax to be paid is £4,486, because it will play a role in this next screenshot, actually the next one coming up. So in this one, what we're looking at here are the profits that Kemi has made from her side hustle. I've put this here for you to, because it's very important to understand the difference between revenue or top line revenue and profit. Okay, so you bring in income, you make some sales, that's your income. That's your income from your side hustle or your revenue, as it were. but you then have some costs. And from a sole trader perspective, you're allowed some allowable business expenses that you can deduct from it, things that have helped you to generate those sales, like marketing, research, accounting, and all the various bits of admin that you might have incurred, admin costs. So in this example, it's 5,000 to give us the 20,000 that I mentioned earlier. Okay. Now, here are those allowable expenses before we then get to looking at her side hustle tax specifically. So the rules are that your expenses have to be wholly and exclusively for business purposes. So for a sole trader, here are the examples of things you're allowed to deduct. So feel free to pause at this part of this video so that you can see which of these apply to your side hustle or online business. Okay, so these are the examples: accountancy fees, bank charges, admin and marketing, and so on. Okay, so let's now look at the tax situation. This time, though, for Kemi's salaried job plus her side hustle income. The reason we're doing this is because this is how you are actually taxed for your total income in a year. Okay, so it's brought together into one calculation to work out what tax you are due to pay in the year. Okay, as well as what national insurance you're due to pay. I'm going to get to national insurance shortly. So in this screenshot, you can see that the very first line, line A, is her income from her job, where she is a trainee accountant, £35,000. Then you have that side hustle profit, keyword there, profit, not revenue, profit of £20,000, giving us a total income, A plus B, of £55,000 in the year. Then we deduct her personal allowance because she gets it like everybody else does, giving us total taxable income of £42,430. So notice I've said that A plus B plus C. And the reason I've said plus C is because C is a negative number in that calculation. So minus 12,570. Then she now needs to pay, we now need to work out what her income tax is at the basic rate, and as well as her income tax at the higher rate, because note, she was a basic rate taxpayer at 35K, but her side hustle income has pushed her into the higher rate of tax at 40%. This means that there is a segment of her income that will now attract 40% tax, okay? Again, I've gone to the salary calculator. As I mentioned before, go on Google, simply type in salary calculator UK. It's usually the first one that pops up. Put the right the right tax year, and you will see that the income tax that she pays at this level is £7,540. And the income tax she pays at 40% is £1,892. When you add the 20% tax, 7,540, and the 40% tax of 1,892, you end up with a total income tax paid or to be paid of 9,432. This is the total she'll be paying in that year, assuming her total income is £55,000 in the year. Okay, so now that we know how much she's made from her salary and her side hustle combined, and we know how much she's due to pay via PAYE for her job, we can now work out the tax that she's due to pay on her side hustle, which is what this page is about. So I've brought together those two previous screenshots, slides, and I've put them all on this one slide for us to see the key differences. So the very first column is just telling us what's going on. Second column says salary plus side hustle. That's that scenario we just looked at. Third column is salary only, assuming she's just paying PAYE on her trainee accounting job. Then the final column is tax to pay on her side hustle. What will she be putting aside to pay on her side hustle? You can see, if you look at the very bottom now, I've put an X and a Y. So total tax on her salary and side hustle is 9,432. Total tax on her salary alone via PAYE is 4,486. And then the difference between them, the third column, is the tax she's due to pay on her side hustle, which is 4,946. Okay, so you can see the breakdown for that is at the top bit, you can see there, some of it comes from basic rate tax, and you can see there, a bunch of it comes from higher rate tax because her income, her total income of 55,000 means she's now exposed to some higher rate tax. Okay, you can absolutely replicate this calculation for yourself if you want. Simply pause this and fill in these cells for yourself on a simple Google sheet, and you'll be able to come to a place where you end up with your own numbers. Remember, as I said, Line D and line E are coming from a salary calculator in the UK, which you can find on Google very simply. Okay, you can plug those numbers in and you can end up with your own calculation. Okay, so that's how you work out how much tax you should put aside for your side hustle. Now, let's talk about national insurance, because that's not the end of the story when it comes to tax. Okay, she will pay national insurance via PAYE for her job. Her usual job, in this case, is 35,000. Her employer will take care of this situation for her. And again, her NI, again, you can work this out using the salary calculator, is £3,328.40 for the current tax year. Okay, her employer deals with this stuff for her. Okay, however, we need to work out what the NI situation is for her side hustle, because she also has to pay national insurance as someone who is operating as a sole trader. Again, looking at the current year, I've set this out for you guys. The first line is the profit, not revenue, profit for the year. Next, she has two lots of national insurance to think about, Class 2 NI and Class 4 national insurance. Class 2 is worked out based on a flat rate for the tax year, in this case, £3.15 per week, multiplied by 52 weeks gives you £163.80. Class 4, however, is worked out to be a percentage over a particular threshold. It used to be 9%, but because the rules have changed starting April 2022, there's an additional 1.25% that's added to the 9%, giving us 10.25%. So to work out Class 4 is 10.25% charge on amounts between 9,568 and 50,000, which is £50,270, which is a higher rate of tax threshold. Okay, when you work that out, that will give, in this example, for Kemi, it will give her £1,069.28. Okay, this is an example. This is the illustration for this particular example. Obviously, this would differ depending on what your personal situation is, how much you've made on side hustles, and that sort of stuff. Okay. So what are the next steps for Kemi, given she's an employee who's also operating as a self-employed person with a legal structure as a sole trader? Next steps are for her job, she should pay her tax and Class 1 national insurance via PAYE for her job. Done. She's all good. But for her side hustle, she needs to do a bunch of admin. First, she needs to register as self-employed by the 5th of April after the end of the tax year, and for self-assessment tax return in order to pay her income tax on her side hustle as a sole trader. So she's doing two things: register for self as a self-employed person and for self-assessment. This is where you assess your tax, doing what I've just done, and say to the tax man, yep, this is how much I think I need to pay in tax, and therefore go ahead and follow the steps and pay your tax. Next, she needs to pay Class 2 national insurance via direct debit to HMRC for her side hustle. You can find this online simply by typing how to pay national insurance for sole traders. Just type that into Google and that will come up. Next, Class 4 national insurance. This is also dealt with via your self-assessment tax return. Okay, so these are the core next steps if you're someone who, like Kemi, is operating as a sole trader, but also has a full-time job in addition to that. Okay, right. So before we move on to the next step, which is about limited companies, I'd love for you, please, if you're enjoying this video, if you love the presentation style, please hit the like, hit the share, hit the subscribe. All three show love, people, for the work that's gone into making this particular video. Okay. Next, we've got another scenario, a limited company example. This time around, we've got Chidi. Chidi's 38 years old. He's a doctor on 75K salary per annum. He pays his tax and his national insurance via PAYE. Okay, standard stuff. He also has a YouTube channel as a side hustle and makes 30K revenue, not profit, via a limited company. His side hustle has £3,000 of allowable business expenses, okay? And he chooses to pay himself a mixture of salary and dividends from his limited company, which is actually pretty common, okay? Because it's more tax efficient, okay? How much will he get taxed via his limited company? Okay, so let's look at an illustration for how you'd go about working this out. So before we go into that, here are the allowable expenses, a bit like I did for sole trader for the limited company. They must be wholly and exclusively for business purposes, So you've got all those usual things, but the one thing I wanted to point out is the pension. You get up to £40,000 a year of pension contributions that are also tax deductible. Okay, that's a pretty important thing to point out if you're running a limited company. Whereas if you're doing a sole trader, you'd have to pay into your pension from your own income, because with a sole trader, the sole trader is the business. So you as a sole trader are an individual and also the business at the same time. Okay, so you can't like pay into your pension from the business necessarily. You have to do it from your own pocket. And when you do it from your own pocket for pension purposes, you can then claim back. You can then get tax relief as a result of doing that. But with a limited company, you can pay straight from the limited company, because the limited company is a totally different legal entity. It's a separate legal entity from you as an individual. I'm going to get to that in a second. Okay. Next are the income tax rates when it comes to if you're earning an income as a director, for example, of a limited company, you've got obviously a tax on all income, excluding dividends. So things like salary, you pay tax on, you get tax-free allowance, as I mentioned before. Then you have these income thresholds that I mentioned before, which are also related. Then you've got dividends, okay, because you can pay yourself dividends, and dividends come out of something known as retained earnings. So retained earnings is a part of the balance sheet of a company. I'm going to be showing you where that is in a minute. Those retained earnings include prior year profits and current year profits. So you can kind of put it all into one pot called retained earnings and gradually take your dividends from there, which is actually a really interesting perk of running a limited company, because with a sole trader, you have to pay tax on everything you make in that year. Okay. Whereas with a limited company, you're actually allowed to keep your money within your business, almost like it's sitting in your balance sheet in the area called the retained earnings, and you can do some tax planning and say, for example, I'll take some this year, I'll take some next year, and so on, because you have that opportunity and flexibility when it comes to a limited company, which you don't have with a sole trader. It's a very, very important thing to mention. Now, obviously, with dividends, it's payable only to shareholders. Okay, so if you're not a shareholder, if you're just a director, you don't get dividends. You get dividends if you are a shareholder of your company. You're allowed £2,000 per year dividend allowance, tax-free, and your dividends can be used, unused personal allowance from your £12,570 towards dividends in a year. So here's a quick example. If you only paid yourself a salary of £8,500, okay, you'd still have £4,070 of personal allowance left, i.e. 12,570, which is your personal allowance, less the 8,500. This means you can now have tax-free dividends of 4,070 plus the 2,000 I mentioned before, giving you £6,070. So you're not losing any personal allowances that you did not use before in this limited company scenario. You're therefore taking it instead as tax-free dividends, because that's actually a really important point worth mentioning. Right. And obviously you have some dividend thresholds. Again, this is really important because dividends, historically, if you're a basic rate taxpayer, you can see that it used to be 7.5%. Okay, if you earn between 14,571 and 5270, but they've increased it recently as a result of the NHS related levy. They've added this additional 1.25% increase. So 7.5 plus 1.25 to give us 8.75. We've done it across the various tax rates for dividend purposes. And this is related to a health and social care levy that the government have had to charge a percentage for related to kind of the NHS and that sort of stuff. So 1.25%, hence why the rates are higher for this tax year of 2022 and 2023. Okay, very important to take a note of that. Okay, now let's move on. Let's look at a limited company tax example. Okay, I hope you guys like my little diagram here that I've done. I've done this to really illustrate a powerful point. When you set up a limited company, the company has something called there's a veil of incorporation. You essentially have two entities. Yes, you as an individual, you're completely separate to your limited company. So almost think of them as two examples. In this example, Chidi, our doctor, think of him as entity one of two. Then on the right is his company. I'm calling entity two of two. Okay, so let's look at the right-hand side first. So in there, I've done a profit and loss account and a balance sheet for you to see what's going on. So when you start and run your limited company, you earn your revenues, your income, your sales, that sort of stuff. That's the first line, that £30,000 that in this example, Chidi's earning in his business, the limited company. Then he has you have to deduct allowable business expenses, which I talked about earlier. In his example, he's got £3,000. And then I've almost segmented salary and highlighted in green because he will want to get paid because he's not running this business for free, right? So he will want to take a salary, and I've put that there as a deduction. So when you've deducted those expenses, the body of expenses, you end up with the pre-tax profit. From that pre-tax profit, we then pay corporation tax, which for the current year sits at 19%. This is the tax that goes to the taxman for the limited company. Limited company is paying this, not Chidi as an individual. Okay, that comes out to give us the profit after tax. Now note that profit after tax here then flows into the profit and loss reserves in the balance sheet. Okay, so that he might have had reserves from previous years. And this area is what makes up what's known as your retained earnings, because your profits are retained within the business. Okay. He then says, oh, okay, I've got like a pot of money here. My balance sheet shows I've got retained earnings. Out of those retained earnings, he then takes dividends because they are a lower rate of tax. Okay. Hence why I've highlighted dividends, and he can take a combo of salary and dividends. Now note, he might have said, you know what, I want to pay all my money that I've made here after my allowable expenses. I want to pay all of it into my pension. He would have a line literally here, just below salary. He will have a line there that says pension and deduct any amount he wants for his pension, and he will not pay tax on that amount. It's worth mentioning. This is where the pension situation will come in this top part of the profit and loss account. Then you can see that dotted line into the second entity, which is the individual. You, in this example, is Chidi, for example. He then has two body of tax situations to deal with. First is his 75K salary from his job, of which his employer will do his pay slips and stuff. He'll pay tax and NI via pay as you earn. Simples, done. However, he needs to go and do something else. He needs to go register as someone who is self-employed and do a self-assessment tax return. Okay, he needs to do a tax return. And in order to be able to declare that he earned income from another organization, in this case, a limited company, that he earned dividends plus salary from a limited company. He would do a self-assessment tax return and thereby go ahead and pay his taxes that are due. Okay, for his salary situation from his limited company, he might get a pay slip because he might have somebody doing his payroll for him as a one-person company. And for his dividends, he will also have to be able to work out those rates I gave you, because it'd be quite simple. You know, you pay 8.75% between one amount and another amount. You just take what you're paying yourself as a dividend and multiply it by that particular related tax rate. Okay, I wanted to show you this screenshot. You know, feel free to pause it, think about it, look at it. But here is essentially what's going on in a limited company situation. The key thing is to think of the two entities, which is very, very different to a sole trader situation where it's just one person, and that one person is also the business at the same time. Okay, so in case you're wondering, you know, should he pay himself a salary or a dividend or a combination of both? We've made a super detailed video, really popular one actually, on this subject on our YouTube channel, where I highly recommend going and checking it out straight after this video. I'll link to it at the end, which is called How to Pay Yourself as a Limited Company Director, Dividends versus Salary. Okay, head over and check that video out. It will show you, and this is all legal, by the way. There's nothing dodgy here. I'm literally just showing you, like, you know, the case for each scenario, whether it's just salary only or dividend only, or salary plus dividend, or salary plus dividend plus pension, and so on. Okay, I did those scenarios in that video, so you can go over and watch that video straight after this one. Okay, so here are the next steps for Chidi. If you, or you, for example, if you're an employee who also has a limited company, for his job, he will have to go and pay tax and NIC, class 1 NI via his PAYE. That's standard. Boom, done. For his side hustle, he needs to go register self-employed by 5th of October after the end of the tax year, and register for self-assessment in order to pay income tax for his side hustle as a director of a limited company. Okay, the tax will be based on both salary and dividends because they have different rates. As I showed you guys earlier, there'll be some NI to pay, and the company also pays another insurance called employers' national insurance in addition to paying corporation tax. Okay, again, asking you, please, if you really enjoyed this, it'd be such a pleasure if you hit the like button, share this video with other people who you think will help, as well as subscribe to our channel for more videos like this one.
Guys, we really hope you enjoyed that video. Do you have any other questions on side hustle taxes in the UK? Let us know in the comments section below and we'll jump in there to answer some of your questions.
Yep, and guys, don't forget, if you really enjoyed that, it will mean a lot to us. Hit the subscribe button, show love for the work we've put into today's video. And as Mary said, we'll see you guys over in the comments.
Thanks for watching, guys. And as ever,
in all things, be thankful and seek joy.
Take care.
Take care, people. Bye.